Welcome to On My Way to Wealth, the podcast where busy Gen Xers can learn financial tips as they navigate life on their way to wealth. And now, please join your host, Luis Rosa.
Hello and welcome to another episode of On My Way to Wealth. My name is Luis Rosa and I'm your host. I hope you are happy, healthy, and safe. Thank you for tuning in. Today, I want to talk to you about mortgage forbearance. I want to tell you what mortgage forbearance is, if it's right for you, how to take advantage of it, and also things to consider before you say yes if you are, in fact, struggling to make your mortgage payment and if you're eligible. So let's get right into it. So basically, if you're experiencing any difficulty making your on-time mortgage payments, especially because of the coronavirus emergency, forbearance may be an option for you. Forbearance can help consumers basically get back on their feet because it's a short-term deferment of your payments, in essence, where you're given a break and not have to be required to make your monthly mortgage payments as you normally would have to, which gives you some relief for sure, especially if you're struggling with income loss, whether you lost your job or got sent home on reduced pay. I have a lot of clients that are experiencing that right now. So forbearance comes in pretty handy. So one thing you need to know is that there are different types of forbearances, and a lot of them may vary depending on the type of loan that you have. Whether your loan is, say, for example, owned by the federal government. So this could be an FHA loan, which is the Federal Housing Administration, VA, which is Veterans Administration, or the USDA, and Fannie Mae or Freddie Mac as well. So if you have one of these loans, the CARES Act actually has some provisions in there that allow you to temporarily suspend your payments if you're experiencing financial difficulty due to the impact of coronavirus specifically. And it doesn't mean that you yourself have to have coronavirus. It's just if you have been impacted. So the definition is pretty broad. It could be that you lost your job. You got reduced pay as a result of coronavirus. It could mean that your spouse or somebody in your household lost their job, and as a result, you have reduced income. So they're being pretty broad in that definition, which is really great. The other good thing to consider is the fact that they're not really requiring a lot of paperwork and proof. It's kind of like you contact your servicer. And by the way, your servicer is the entity that sends you your statements, which sometimes doesn't mean that they own that loan. So I wanted to touch on that a little bit. So you might get a statement from XYZ Bank every month, but it doesn't mean that that bank is your actual mortgage holder. There could be an entity behind it like Fannie Mae, Freddie Mac, FHA, et cetera. And the entity that you deal with, that you know as the bank, the mortgage company, is just the servicer of that debt. And all they are in charge of doing is sending you your statements, collecting your payments, and keeping track of your account. So pretty big distinction there because that could affect the type of forbearance that you have available to you. So if your loan is somehow a government loan, again, like I said, FHA, VA, USDA, so that's the U.S. Department of Agriculture, Fannie Mae or Freddie Mac, there are provisions in the CARES Act that allow you to temporarily suspend your payments. Now, the initial one, a lot of banks are just giving you like a 3-month deferment option. You have up to 180 days under the CARES Act where you can get forbearance. So in essence, you don't have to make your monthly mortgage payment. And then on top of that, you can also request another extension for up to an additional 180 days. So when you do the math, 180 and 180 is 360. In essence, you could potentially get your loans deferred for an entire year, your loan payments for that mortgage, which could provide a lot of relief. You know, I have a lot of clients right now that have called me and said, I have my job still, thankfully, but they reduced my pay 25%, you know, all kinds of things that I've seen, getting laid off, reduced pay, or a spouse lost their job or got reduced pay. So this could come in pretty handy, and it's something that you should definitely consider. So how do you find out about this? You just contact your servicer. And for the most part, the best way to do so is to, if you don't already have one, is to create an online account with your servicer and log into your account. Unfortunately, there are millions of people in the same boat where they're not able to make their monthly mortgage payment. And servicers are just so overwhelmed that they don't even have the capacity to speak to people, which is a bad thing in and of itself. But the flip side to that is that as a result, they have made the process extremely simple, simply by you logging into your account. For the most part, every servicer that I've seen that has offered this forbearance option to my clients, the minute they log into their account, it's like right there on the homepage. Click here if you've been affected by COVID-19. Would you like to take advantage of this 3-month, 6-month forbearance? Yes, no, yes. and it's typically just approved automatically without documentation and going through a process. So definitely be sure to contact the servicer if you are in fact struggling to make a payment and see if you could take advantage of this. Now, there are two things that I wanted to point out. Sometimes you might be able to take advantage of this forbearance, but in reality, you can still make some form of mortgage payment. So let's say you're not able to make your entire mortgage payment. So let's say your mortgage is 2,500 and, you're home on reduced pay, you haven't lost your job, maybe you can pay 1,500. But for the most part, once you apply for the forbearance, they just don't accept any payments, right? So you still have some extra income that normally you would be sending to your mortgage payment. Now, I want you to consider this as a great opportunity to then think about, what should I do with this money, right? I typically pay 2,500. I could afford 15, but my mortgage is currently under forbearance. Two things to consider. Number one, if you notice, for the most part, most people pay their property taxes and their homeowners insurance via their mortgage payment. So think about it this way. Every month, your mortgage lender or servicer takes 1/12 of whatever your property taxes are and whatever your mortgage insurance is for the house, the property insurance, and puts it into what's called an escrow account. So you see that your payments that are due are your principal, interest, and then escrow, right? So throughout the year, the servicer is collecting these payments from you, putting them aside on this escrow account. And then every time that property taxes and school taxes are due and your homeowner's insurance, they get the bill and then they pay it for you. Now, what happens to that when you are under forbearance? If you think about it, you're no longer making your mortgage payment, which also means that you are no longer making the payment towards your escrow account. Now, this could be a double-edged sword, because while you're getting relief, and it's great because you might be home on reduced pay or no pay at all, you're also creating a deficit in your escrow account because property taxes will still be due, and so will homeowners insurance. Now, the bank that owns that loan does not want to default on the property taxes, and they definitely don't want the house not to be insured, because remember, you have a mortgage, they have a lien on your house. So when you look at it from their point of view, they can't afford the chance of property taxes not being paid and homeowners insurance not being paid, because if the house burns down and there's no insurance on the house, they can lose out on a payment, right? On the lump sum payment that you owe them on that mortgage. Same thing with property taxes. If they default on the property taxes, the town can come in and foreclose on the home and actually take the house back and then sell it for at auction, right? So the bank wants to make sure that these property taxes, homeowners insurance are paid. Now, here's the problem. You have a forbearance, you're not making monthly payments, and that's great for you. So what does the bank do? They still want to pay these taxes and insurance. So they go ahead and send the money to the property taxes, school taxes, homeowners insurance on your behalf, but they don't have enough necessarily on your escrow account because you have not been making payments. So imagine you take advantage of the full forbearance period. It could be 3 months, 6 months, up to a year. Now you have a deficit on your escrow account. The bank laid out the money for you. When it's time to go back to make payments, the payments resume, you are going to have a big deficit on your escrow account. So what the bank is going to do, they need to make that money back just to replenish the escrow account. They're going to charge you whatever you're supposed to pay normally, plus another amount divided over a certain period. It depends on the bank. They can spread it over a year, 24 months, 36 months, but ultimately it will be a bigger payment that you normally are used to paying temporarily until the funds in that escrow account get replenished. So here's what I'm telling my clients to do. Yes, forbearance is great. It allows you not to make a payment for a certain period of time, up to a year, depending on what type of loan you have. The other good thing about it is that they're not charging you any penalties. They're not charging you any interest extra. So the interest still accumulates on your loan when you have forbearance. So it's not like you're getting away with not paying interest. What some banks are going to do is they're going to put it on the back end of that loan. So when you do resume payments, you can start making payments normal, and then the interest is added to the back, or you have an extra couple of months left on your loan. What I've seen some banks do, and I hope they don't really follow through with this, is they've stated that they want all of the payments that you did not pay all due as one lump sum, which is kind of unfair, I feel like, because if you're struggling because of coronavirus to pay your mortgage payment and you take this 3-month forbearance, how are you going to come up with 3 months all at once 3 months from now? It just doesn't make sense to me. Fortunately, most lenders are probably going the route where they're either going to allow you to pay back a slightly higher amount on your mortgage payment over a period of time or add it to the back of the loan. Or some lenders I've seen where they create a second mortgage for that lump sum that you did not pay and create a separate lien on the house for that. And it just has to be paid either at the end of the loan or whenever you sell the house. But what I wanted to come back to was, let's say that you are still able to make some payment. You just can't afford the entire payment. I want you to contact your servicer. And a lot of servicers are giving you this option is, and tell them, look, I can't afford the mortgage payment. Can I still continue to pay my escrow payment? Because if you do that, you are now providing the lender with the same amount of money that you normally would have had you been making your mortgage payment towards your escrow account, which means that they can use the money that you're contributing to the escrow account to continue to pay the homeowners insurance and the property taxes. This way, whether you took 3 months, 6 months, or a year on the forbearance, when you resume payments, if your lender just says, look, we just added them to the back with no penalty or extra fees, well, that's it. You just resume payments and you're good to go because you've been paying into the escrow account and they've been able to pay the property taxes and homeowners insurance. So this is very key because I have some clients that have been sent home on reduced pay and they've taken advantage of this forbearance option that's been offered by the lender. But they've been smart about it because they said, look, since I am on reduced pay, I am still getting paid. So I do still have some capability of making some form of payment, just not the entire thing. So we'd had the discussion. I told them, make sure to contact your servicer and see if you can make escrow payments. And all of them have been able to do that so far. So if for some reason your servicer just does not offer that option, see if they'll let you pay directly to the homeowners insurance and the property taxes. And if not, maybe you could just set them aside because that bill is coming without a doubt. So something to consider and something that if you do it right, you could take advantage of this forbearance, not have a negative impact to your credit, not have extra fees, not have extra penalties, and still not have this huge jump in payment when you do in fact get back on your feet and start making your mortgage payments. So I hope that you find that information useful. Definitely contact your servicer. If you have any questions, feel free to send me an email at luis@onmywaytowealth.com. Also, if you're not already on my newsletter, go to onmywaytowealth.com, sign up for my newsletter. You can download a free ebook with tips that every Gen Xer should be doing now. And then you get content every week from me. And if you have an idea of anybody that I should be interviewing or you have a specific topic that you'd like to hear about, send me an email, luis@onmywaytowealth.com. And I'd love to hear from you. So thank you all for tuning in. Stay happy, healthy, and safe. And I'll see you in the next episode. Thank you for listening to On My Way to Wealth. If you have any questions, please send me an email at luis@onmywaytowealth.com. The information provided here is for information and education purposes only. The opinions expressed herein are solely those of myself, unless otherwise specifically cited. Material presented is believed to be from reliable sources, and no representations are made by my firm or myself about other parties' information or accuracy or completeness. All information or ideas provided should be discussed in detail with a financial advisor, accountant, or legal counsel prior to implementation. Thank you.